A very warm welcome back to the channel. Porter Airlines are expanding into the United States. Air Canada has published its quarterly results, and All Nippon Airways are publishing record revenues. Why not begin there? With it very much earnings season, and ANA have published their results for the first 6 months through September 30, revealing steady improvements and notably some record revenues. Thanks to strong demand, the carrier reported those record revenues. Record-breaking revenues are a persistent theme right across the industry, and if you've been tuning into the channel in the last couple of weeks, it may feel like deja vu, and you'd be forgiven if you felt this way, with seemingly every earnings seeing something very similar, that is, revenues reaching record highs. Operating income also progressed faster than planned for the fiscal year. However, operating expenses continued to rise within the ANA operation, making optimal day-to-day flying and overall performance a little bit challenging at the best of times. Ultimately, those operating expenses are worth spending just a couple of extra seconds on. ANA has seen them soar for many reasons, but it argues that higher maintenance costs year over year are one of the key reasons why this has taken place, alongside its own decision to invest a lot more money into human resources. They believe these to be worthwhile investments, but ones that are going to increase costs year over year. Looking ahead, it's about finding ways to mitigate these costs and obviously balance everything out. Furthermore though, and very much generally, they say they're pleased with the results that they saw, stating that this occurred during a challenging period, but also one that had strong opportunities. So as a result, they firmly believe that their employee base should be commended for their support and dedication in helping propel the carrier forward. Looking further ahead, however, while the airline sees the positive first half-year results as an emphasis on their long-term strategy, they intend to stick to this strategy, which is focusing on sustainable growth, and they will not change their second half forecasting. ANA says it saw its international division's passengers, revenue, and almost all metrics, excluding passenger load factor, increase, with strong demand for travel to Japan certainly helping this. Domestically, the carrier saw increases across its key metrics, from average seat kilometers to passenger load factors and revenue. There were some concerns that weather would play a role, such as the typhoons that took place, but volume and revenues exceeded expectations over the previous year, and in the end, they definitely had a stable operation. During the year's first half, they focused heavily on the development of their network by looking to offer extra flights to markets that had increased leisure demand. However, Airbus aircraft did have to be grounded for almost 9 months. This came as ANA battled those Pratt & Whitney geared turbofan engine difficulties, something that is plaguing the broader industry. In terms of the cargo division, it also saw solid increases, with the international freight operations increasing revenue and freight carried. Meanwhile, domestically for freight operations, there were increases, with the company focusing on more profitable routes and network reshuffling where required. Over to Air Canada, who also published their third quarter results with a strong performance, so the results were actually above their overall expectations that were initially laid out. Across the third quarter, Air Canada saw operating revenues reach Canadian 6.1 billion and operating income hit 1 billion. These figures are substantial, but do align with what other airlines are reporting, as we have seen revenues typically increase. While strong revenues were reached, there was a still 4% year-over-year drop, Air Canada attributing this net profit to lower passenger numbers across some of its important markets. But expectations were still exceeded based on what they initially forecasted, those forecasts being driven by market conditions, which we know to be ever so challenging. Air Canada also focused on the overall performance across the quarter, and this was really reflected in an 8% rise in its on-time performance year over year. The carrier sees figures like these as very important in ensuring that its relationship with customers continues to rise, and improvements can be felt on an annual basis. Moving some 13 million customers in the third quarter, it was ultimately a busy one, with a lot of heightened interest in travelling to the likes of Paris, where we saw the Olympic and Paralympic Games take place. Furthermore, this all clashed with some of the busiest months of the year, as the summer season not only came into its peak time, but also winded down. So now, as 2025 approaches, Air Canada will emphasize the development of its route network, something it highlighted in a recent investor PowerPoint, which will be discussed in an upcoming video. So, several new routes are slated to launch in the coming months, and we know that the airline is already planning to add more in 2025. The next 5 years set to be incredibly busy for this flag carrier. But a lot of this really rests on the availability of aircraft to facilitate the launch to new markets, and even the upgauging in existing ones. Air Canada has cited numerous times that there are cities on the radar, but it requires the available aircraft to make all of this possible. They are now moving also ahead with a share buyback program and returning value to shareholders wherever possible, addressing some of the dilation experienced from the financing decisions that were undertaken during the pandemic, certainly showing that recovery is still ongoing for some companies following decisions that were made during that incredibly tough period for all. After paying down debt, the airline's CEO has stated that this will fund its growth and align with a capital allocation roadmap and strategic plan that will be fully unveiled just before this year ends. The Canadian flag carrier remains optimistic that the overall demand environment is really favourable, and therefore their full year guidance has been adjusted to reflect this. Considerations will also be taken into account for the evolution of fuel price, which always are fluctuating, and the assumption that they will see rises thanks to contractual related adjustments being required, a hot topic in our industry across the last 18 months or so. Staying within Canada, and Porter Airlines, well, they've been on the channel here quite frequently in the last year, and rightfully so. They've announced another major expansion of their services from Ottawa International and Montreal Trudeau. As part of the airline's latest growth ambitions, further service is now set to take shape towards the United States, with the inauguration of new seasonal routes. Porter will begin, or has begun now, probably at the time this video is going live, non-stop service between Ottawa and Montreal towards Las Vegas Harry Reid. In doing so, it will be the only airline operating in the Ottawa to Las Vegas segment. This to operate on Mondays, Wednesdays, Fridays, and Sundays, making 4 weekly flights. Meanwhile, Montreal to Las Vegas will operate thrice weekly on Tuesday, Thursday, and Saturday. This flight will take place after the aircraft initially completes the Vegas to Montreal portion first. Furthermore, the airline is also commencing non-stop daily flights between Montreal and Fort Lauderdale, the airline's first direct offering between Montreal and Florida. These flights will operate at varied times, with the airline, for example, stating that between November 2 and December 13, flights will depart at a certain hour, but that will change after. Porter is using its Embraer E195 E2, and I simply can't state this enough, just how important this aircraft has been for them. It is a next-generation single aisle that has been rapidly delivered to this Canadian company, and is taking them by storm, facilitating major expansion, not just within the country, but towards the United States, and they've emerged as a fierce competitor in what is a very challenging market, and it will certainly be exciting to see how hopefully Porter continue developing as the years go on, and if they can really cement themselves as a bit of a disruptor in the Canadian portion of the industry. Again, really focusing on the eastern part of Canada, with Toronto, Ottawa, and Montreal all getting enhanced connectivity. That'll conclude today's industry recap. Well, any thoughts? You know the best place to leave them is down below in the comments. Thanks a bunch for your support. Take care, be safe, and I'll see you tomorrow. And we'll fly.